All right, the top 22 questions asked about loan modifications. Number one, what it is. Nothing more than modifying your existing mortgage. That's it. Banks can change the interest rate, they can change the term, they can forgive past due amounts, penalties, and interest, and they can even reduce the principal. Who can you trust to do one? Well, of course you can do it yourself. Obviously, you probably don't have the expertise that loan modification specialists do, but you can certainly do it yourself or get a referral from someone that has successfully used a firm to do one for them. Can a lender forgive past due payments and penalties I just mentioned? Yes, they absolutely can. How does the government, $75 billion they're throwing at the problem affect you? Well, a couple ways. First, the banks now have a cash incentive to work with homeowners like us. Secondly, if you get a loan mod done successfully and pay on time, you may be eligible for a principal reduction of up to $5,000. How do you know if you qualify? Well, if you're doing it yourself, the bank will tell you. If you use a firm like I do, which has 9 law firms nationwide, we fill out a short form free of charge to find out whether you qualify for one of those law firms to represent you. Do I have to be late on my mortgage to qualify for a loan mod? No, you don't. Used to be, but now you don't. What's a hardship letter and why do you need one? Hardship letter is nothing more than you explaining why you are either behind or think you're going to be behind in your own writing. Doesn't have to be but a paragraph long. Will a loan mod stop a foreclosure? Yeah, right up until about 2 weeks before the sale date it will. How will a loan mod affect my credit score? Good news, it doesn't. Doesn't affect your credit score one iota. However, if you're 3 months behind, your credit's already taken a hit. But in and of itself, a loan modification does not affect your credit score. Can you do one yourself or should you hire someone? Well, first part is yes, you can. Should you hire someone? I don't know. It's up to you. I know that our law firms, I should say, have a 97% success rate, and again, a free evaluation to find out whether they will accept you to represent you to your lender. Is a loan mod the same as debt consolidation or debt settlement or refinancing? That's a no, and a no. What's needed to start the process? Well, with us, it's about 10 minutes of your time, no money, and we will let you know within 48 business hours whether you qualify. If you're doing it yourself, just call the bank. They'll tell you what you need. How long does it take? Well, we're running about 30 to 60 days. Individuals that do them themselves, substantially longer. What's a typical success rate if you do it yourself versus hiring someone? Well, national averages are 80% of people that do their own loan mod within 12 months are delinquent again. With us, it's less than half that. Why would a bank do a loan mod, especially if you're current? Well, it's because they're not as big idiots as they used to be. They now recognize that a foreclosure costs them on average 50 grand. So they're a whole heck of a lot better financially if they'll work with the homeowner to restructure the mortgage to where you can afford it. If you owe more than the value of your home, will they reduce the principal? Case by case, but yes, they have been known to do that. Why do some companies charge upfront fees and some don't? Well, this is a red flag for me. If someone wants to charge me a fee to find out, problem. Our firms do not charge anything up front to let you know whether or not they'll represent you. What are the normal fees and what should I expect to pay if you hire a company? Well, if you do it yourself, there are no fees. If you hire a company, averages nationwide are somewhere between $2,500 and $5,000. $2,500 to $5,000. What's the advantage to having a company with attorneys represent you? Well, that answer is real simple. When I call the bank or you call the bank, chances are you don't get through to the people that a law firm gets through to. The other advantage is a law firm, because this is what they do, knows what certain banks are willing to do as far as negotiating, and you and I don't. Why do some companies offer guarantees and some don't? It's probably because some companies don't know for sure that they can perform and they don't want to give back your money. We do. Do you have to be employed? No, you do not have to be employed. If you have unemployment that will cover a new loan or a loan modification, with the hopes of getting back to work, that can be enough. Depends again on the lender. Can I do a loan mod on an investment property? Answer is yes, you can now. If I already have a low fixed rate mortgage, why would I consider a loan modification? Well, answer is if you are having problems making it, the answer is pretty obvious. You don't know what a bank is going to accept when you're represented by a law firm, and it doesn't cost anything to find out. We had a case where a guy had what he considered to be a great rate, which was 5.75. Bank was able to agree with the law firm to drop it to 4.25. So that made a huge difference. Guy had a huge mortgage, made a huge difference in the affordability. The bottom line is it doesn't cost anything to find out. Loan Mods Are Us, with little dashes on either side of the R, is one of the websites you can go to for more information. Again, 9 law firms handle the negotiations for you, 97% success rate. And if they can't successfully complete a loan mod for you, you get your money back. Email me, call me, visit the website, do something. But do something. Thank you for your time, and may God richly bless you today.